Let's go to CommSec. Tom Piotrowski is with us as always. His eyes on the prize on all the details. So how do we begin today, Tom?
Pete, we're going to kick off with a modest improvement, around 0.4% according to the futures at this stage. US markets are actually doing quite well. Generally, there's a pensive note for global investors because they are anticipating several interest rate decisions from global central banks. We've got the Bank of England, the European Central Bank and the US Federal Reserve all due over the course of coming days. It's almost like New Year's Eve in the financial market. So in terms of the reason that US markets are doing as well as they are at the moment, we've got the Dow up by around 0.2%, the S&P up by almost 1%, and the Nasdaq is up by 1.1%. Is that a measure of labour costs in the US came in below expectations for the last month, and it's the third consecutive outcome where we have seen a moderation in labour costs. So that has been very reassuring. We've seen an easing as far as long-term interest rates are concerned, and short-term rates for that matter. And then in addition to that, we have seen a consolidation of the belief that the US Fed will only raise rates by 0.25% when they meet overnight. So bearing in mind that, we've come from moments where the commentary suggested that we could be seeing rates up by as much as 0.75% at this meeting, and that's all moderated over the course of the last couple of months. So that's part of the reason why stocks are doing as well as they are at the moment.